Hello everyone, good morning. First of all, welcome everyone to Global Online Kannada. So if you are preparing for the upcoming NET examination or KSET examination, and if you are preparing from the management or commerce background paper 2, this session is very important because in the accounting and financial management unit, the most important topic is marginal and standard costing and variance analysis. In this you will see the practical questions are coming in the examination, right? So it is very important to know how to solve those questions, what is the formula for that, and what is the trick to by heart those formulas, right? So in this session we are going to discuss some of the important MCQs on this topic. This will beneficial for you to upcoming in the upcoming examination. It will boost your confidence to solve these kind of questions, right? So please, I suggest everyone, please watch this video till the end and share as maximum as you can. Okay, one more thing I would like to share with you all. If you are preparing for the upcoming UGC NET December attempt or KSET examination from the commerce or management background, we have come up with the very important thing, the complete course for your preparation, in which you will get all the things which is necessary to increase the boost your score in the examination. You will get video lectures, complete video lectures. That means your all syllabus will be covered in that. Complete syllabus notes will be provided to you, mock test also provided to you, so you will be having a very good confidence to solve the tricky questions, moderate to hard level questions, any kind of questions if coming in the examination, you will be able to solve very easily. Okay, PYQs with explanation will be provided to you, so you will have an idea about the examination pattern, what kind of questions can be asked in the examination. Okay, and that will also boost your confidence. Doubt clearing sessions will be there, so you can ask any questions, any doubts if you are having in your mind. The experts will guide you regarding that. Okay, marathon sessions will be also taken by the experts. Okay, so this is overall package for upcoming examinations. If you want to join, please contact on this number. Just do WhatsApp message or WhatsApp call on this number and join the course from today. Okay, so start your preparation today. It is very necessary to whatever time we have in our hand, just prepare yourself better. Okay, all right. So one more thing, I'm trying to explain you in this session. See, yesterday we have discussed some of the MCQs on the same topic, but what we have done in the yesterday's session, we have completed the formulas. Okay, so with that formulas we will be having some practical questions today. Okay, so if you have not watched the previous video, please watch that video as well, so you will have an idea what kind of formula type of questions can be asked in the examination, right? So based on that we will have some practical questions today. So first question is about the break even sales. Okay, so yesterday we have discussed the a contribution formula. Okay, so if you have if you remember, you will able to solve this question. Okay, so if selling price is 50 rupees and variable cost per unit is 30 rupees, right, and fixed cost is also given, which is 8,000 rupees, so what will be the break even sales in units? Okay, remember, sometimes what happens, it will give you in a price or it will give you in a units, so formula for the both may be different. Okay, so always read your question first very carefully and then try to answer. So selling price is 50 rupees, variable is 30, and fixed cost is 8,000 rupees, so you have to match to that 8,000 rupees, okay, to make a profit, right? So what will the break even sales in unit? Find out, and you can give your answer in the chat box. Okay, is it 200 units, 400, 500 units, or 800 units? Give your answer in a comment box. All right, so right answer is option B, that is 400 units. Okay, if you remember, we have discussed the contribution formula in the previous session, right? Understood? So the selling price minus variable cost. Okay, you will have the contribution, correct? So contribution we calculated. Okay, so according to that we can cross verify, right? Cross calculation we can do. The break even units, okay, is equal to fixed cost divided by contribution per unit. Getting it? So what is your fixed cost? It is 8,000 rupees. Contribution per unit is your 20 rupees. Okay, so what will be the answer? 400 units. So right answer was option B, 400 units. Okay, see, first you need to calculate the contribution. Okay, because the formula for break even units is fixed cost divided by contribution per unit. So contribution is not given in the question. You have to solve it by yourself. Okay, so first we have calculated the contribution, which is selling price, right, minus variable cost. 50 minus 30, 20 rupees your contribution per unit. So if you divide your contribution, okay, by the sorry the your fixed cost divided by the contribution, you will have the break even units. What is it? Units. Okay, I'm talking about the units, not the price, right? So this is the formula for the break even units. Okay, so 400 units will be your right answer. Next question. If contribution is equal to 60,000 and sales is equal to 2 lakh, the PV ratio is equal to question mark. So contribution is given, sales is given. What will be the PV ratio? If you remember the PV ratio formula, you will able to answer this question. 30%, 20%, 40% or 25%. What will be the correct answer? So right answer is 30%. Okay. See the formula. So PV ratios formula is contribution upon sales into 100. So contribution, it is given in the question, it is 60,000 divided by sales, it is also given in the question, that is 2 lakh rupees. Okay, so into 100 when we do, 60,000 divided by 2 lakh, the answer will be 0.30. Into 100 when we do, you will have the answer 30%. Remember, if any question is asking about the percentage, it should be into 100 always, whether it is in paper 1 or paper 2. If question is asking about to calculate the percentage, the question will be, the answer will be calculated in the, so whatever the amount which is given, you have to do into 100, so you will have the percentage. Okay, next. A company has fixed cost 1,20,000 and PV ratio is 25%. Okay, so here the PV ratio is given and the fixed cost is also given. So what will the break even sales? So here the units is not asked. Okay, the question is not asking about the units, it is in the rupees. Getting it? So give your answer. Students, please try to answer in a comment box. Okay, whatever A, B, C, D, just give your answer. Whether it is wrong doesn't matter, because we are studying here, right? So even in the examination there is no negative marking, so you can attempt the questions, try to attempt the questions. A, B, C, D, whatever it is, just give your answer in a comment box. So right answer is option B, that is 4,80,000. Okay, see the formula. Break even sales in rupees we are calculating, correct? So fixed cost divided by PV ratio, that is the formula for break even sales in rupees, right? So let's calculate it. So 1,20,000 divided by 0.25, that means 25%. Okay, it will be taken as a 25, 0.25, right? So the answer will be 4,80,000. Okay, see, a product standard 2 kg material per unit at 10 rupees per kg. Getting it? So here what is happening, 2 kg material per unit, that means 2 kg, right? 2 kg is considered as a 1 unit, correct? 2 kg is considered as a 1 unit, right? And the price for it per unit is 10 kg, 10 rupees per kg, right? Actual production is 1000 units. The actual production is 1000 units. Okay, so 2 kg per material at 10 rupees per kg, and 100 units are there. Okay, so there will be 2000 units, correct? Am I right? 2000 units will be there. So actual material used 1900 kg. Okay, so 2000 units are total in actual, and actual used 1900 kg. Okay, actual price is rupees 11 per kg. So what is material usage variance? It is favorable or unfavorable. Okay, remember, whenever we calculate MUV or MVP, okay, that time we need to calculate, and we need to tell that which is favorable or unfavorable. Getting it? So here in this term, the everything is given, the units are given, the actual material used is given. Okay, uh, actual production is also given, so we need to calculate MUV. So what is the formula of MUV? So right answer is 1000. It is favorable. How it is calculated? Try to understand. Standard quantity allowed. As I said, the 1 unit is what? 2 kg. Okay, so 2 kg is equal to 1 unit. So we have 1000 units. So 2 kg into 1000 units, that means we have 2000 kg. Getting it? 2000 kg we have. So actually it is used 1009 kg, 1900 kg. Actually 1900 kg from the 2000 kg is only used, right? So we have a 100 rupees difference in that. So what is the MUV formula? Standard quantity minus actual quantity into standard price. Okay, so we have standard quantity 2000 kg, actually quantity we have used 1900. Okay, so we will minus from the standard, so you will have 100 quantities remaining, right? Sorry, 100 kg remaining, and into 10. 10 is what? It is standard price, which is given here. This is standard price. Okay, actual price is not taken. Okay, in the formula the standard price we need to take. So when we multiply the remaining kg or remaining units, okay, with the standard price, we will have the MUV. So 1000 rupees. Okay, it is in positive way, so it is favorable. Okay, since the actual uh, uh, the quantity is less than the standard, so variance is favorable. Okay, understood everyone? Next, using data, standard label time per unit is 4 hours. Okay, at 50 rupees per hour, produced 500 units, and actual labor time is 1900 hours. Actual rate 48 rupees per hour. What will be the labor efficiency variance? So yesterday we have discussed about this formula, right? So what will be the correct answer as per this given using given data? A, B, C, D, whatever, you have to give it the answer in the comment box. All right, so 5000 favorable, it is calculated. See, whenever the answer is coming, it should be favorable or adverse. Okay, depending on the answer. If it is negative, it will be adverse. If it is positive, it will be favorable. See, standard time allowed 4 hours, right? And 500 units is produced, right? The labor time per unit is 4 hour, and the production is 500 unit, right? So we have 2000 hours, that is standard time. So efficiency variance formula is standard hours minus actual hours into standard rate. Okay, so we have standard hours 2000, we calculated it. Actual hours is taken 1900, okay, into 50. What is 50? That is standard rate. Okay, so we have 100 remaining hours into 50 standard rate, we have 5000 rupees favorable. It is in positive, right? So that is why it is favorable. So actual hours are less than the standards, so it is favorable. Using same data, that means the previous data that we have taken for this question, using the same data, standard labor time per unit 4 hours at 50 rupees per hour, produced 500 units, actual labor time is 1900 hours, and actual rate is 48 rupees per hour, right? So what will be the labor rate variance? Here we have calculated labor efficiency variance, okay, and here the labor rate variance, right? So right answer will be option C, 3800 favorable. How it is calculated? The rate variance formula is actual rate minus standard rate into actual hours. Okay, actual rate minus standard rate into actual hours. When we calculate it, we will have labor rate variance. Clear? So we have actual rate 48 rupees, right? Standard rate 50 rupees, right? And the actual hours is taken 1900, right? So here, if we calculate actual rate is 48, right, and the standard which is 50 rupees, we'll have the answer in the minus, right? So when we calculate minus 2 into 1900, so the calculation will be minus 3800. It is also favorable. Why? Because the actual rate, right, the actual hours, the actual minimum the price, okay, is less than the what? Less than the standard one. Getting it? So it is favorable because whatever it is necessary, we have produced in the less, right? Whatever the budget was given. For example, if we have a 100 rupees budget and we need to calculate in the 100 rupees budget the minimum 100 units, right? And we need to take only, we have only 5 days. But what we have done, we have completed in 3 days with the 90 rupees. So we have done in the minimum one, right? So that is why it is favorable. Whether it is in minus, it is favorable. Clear? Company has the standard 1.5 kg material per unit. Here's the cursor. 1.5 kg material per unit at rupees 20 per kg, produced 2000 units. Okay, so company has this kind of standard 1.5 kg material per unit at rupees 20 per kg. This is the rate, okay, standard rate, and company has produced 2000 units. The actual material used 3100 kg at 90 rupees per kg. Okay, so standard is given, actual is given. So what will be the material price variance, MPV? Okay, what will be the MPV? So if you remember the formula, try to calculate it. So right answer is 3100 favorable. Okay, let's calculate it. MPV formula is standard price minus actual price into actual quantity. So we have standard price rupees 20, actual price rupees 90, okay, into 3100, that is actual quantity. Okay, so we'll have 1 into 3100, that means 3100 will be the right answer. Okay, so option A, 3100 favorable. Clear? Using same data, the same data that we have used in the previous question, 1.5 kg material per unit at 20 rupees per kg, produced 2000 units. Okay, actual material is 3100 kg that is used at rupees 90 per kg. So what will be the MUV? Again MUV, the question is arised. So right answer is 2000 adverse. Why? Let's calculate. Okay, standard quantity we need to calculate first. Okay, whatever what is actual one is. So 1.5 right, the kg per unit, right, and 2000 what, 2000 is the produced units. Okay, so what we have, the 3000 kg will have. Okay, the standard quantity it is actually used 3100, so we have used 100 kg extra, right? Usage variance standard minus actual into standard price, very easy formula. Okay, it looks hard, but it is actually very easy. What we are doing, we are just calculating what is the standard quantity, what is the standard price, what is the standard rate, what is the standard hours. Okay, and we are just minimizing those, or we are just comparing those with the actual we have used. And if it is less, that will be favorable. If it is not less, if we are using more than that, it is not favorable, it is adverse. Okay, but we need to calculate it in a standard formula, right? So that is why we need to do this. So what is the formula of MUV? Standard minus actual into standard price. So we have standard of quantity 3000 minus actually we have used 2100 into 20, that is standard price. We'll have the answer minus 2000. Okay, it is in rupees, not in quantity, it is in rupees. So minus 2000 will be the answer, so it is in adverse. Okay, so right answer will be the option A, 2000 adverse. Next, the product standard material 4 kg at rupees 5 per kg, produced 1200 units. Okay, actual material used 4800 kg at rupees 6 per kg. Total material variance 4800 adverse again. So standard cost will be the 4 into 1200, okay, into 5. So right answer will be 24,000. Right? So actual cost is 4800, okay, kg, and add rupees 6. So 28,800 the actual cost. Standard cost is 24, actual cost is 28,800. Okay, so total variance formula is actual minus standard, right? So 28,800 minus 24, we have 4,800 adverse. Okay, so right answer is option A, 4,800. If the standard hours allowed for actual output are 1,500 hours, actual hours worked 1,650, more than that, and standard variable overhead rate is rupees 10 per hour. What will be the variable overhead efficiency variance? We have discussed this formula yesterday, right? All right, so right answer is 1500 adverse. Okay, see efficiency variance formula, standard hours minus actual hours into standard variance overhead rate. Okay, so we have standard hours 1500 and actually we have used 1650, right, into 10, what is that, is standard variance overhead rate. So 150 is in minus, so that means we have used more 150 hours. Okay, so answer will be in the minus, right? So 150 into 10 will be the 1500 minus, so it is in adverse. So right answer is option E, 1500 adverse. Okay, I hope you have understood all the questions, how we have solved, how we have calculated. So this kind of questions can be asked in the examination, right? So you have to calculate it and you will have your marks. Okay, so just let me know from your side, is this good time to have a session every day 9 a.m. for people who are preparing for the commerce or management? Because the sessions we are going to take, that will be beneficial for management and commerce, because there are multiple topics which are similar in the both papers. Okay, so we'll have those topics which is similar in the both, so it will be favorable for management and commerce as well. So if you are preparing from commerce, it is beneficial for you. If you are preparing from the management, it is beneficial too for you. Okay, so every day at 9 a.m. we'll have the session for paper 2.